What's up, everybody? Welcome to a special outdoor edition of Masters in Trading Live. It's actually not an outdoor edition, but I'm slammed tomorrow, so we are making this Wednesday evening. Why? Well, I want to get on here because we are darn close to getting the strongest buy signal that I know of. Now, many of you are thinking, yes, we're under our line in the sand, under that 433, but for whatever reason, the market's not free falling like it should. It's holding up. So if things reverse, and I'm gonna go to the charts and show you exactly what I'm talking about, we could be in for the mother of all buy signals. Let's go to the charts. Okay, so I have you at the charts. The line in the sand all week, 433. For the last couple of weeks, it's a really good exercise to go back and watch previous videos and see how you could have handled this trade. Now, we have a community, and I've seen lots of feedback from our guys taking advantage of this insurance play, this play that helps protect your trading account, which we're able to do this week, and last week we're able to do going into unemployment as well. Well, once this QQQ broke through this line in the sand, the market was gone. Traded down to 426, 425. Now, the benefit of catching such a move, Rick says it best, it gives you profits, but best of all, it gives you peace of mind. And that's why we want to hedge, because when that short-term VIX starts to spike, starts to get really strong, that's literally excess risk going into the market. It's a great play to buy some insurance, because then when the market does come off, you can use those proceeds to add to your favorite stock. So you're not bummed when the market pulls back. Instead, you see it as really cool opportunity. Last couple of weeks, we've been talking about VIX term structure. The VIX 9 days and the VIX 30 days. That's what's in front of you. The red line is a 9-day measure of the VIX, and the yellow line is the normal VIX. And a VIX is just a measure of volatility. As the 9-day, this red line right here in April, started to spike, the 30 followed it, and they're both as high or as strong as they have been since October, November 2023, or even going back to Feb, March. Now, when the market trades through our key line in the sand, it should fall, and if it doesn't, it's actually kind of strong, because any kind of reverse is super, super strong. But what we're looking for in a reverse, and we're staying with a short bias as long as the VIX, short-term VIX, VIX 9D, stays over, let's say, 17. Any trade over 17 in that short-term VIX, bearish the overall market, and I bet you that QQQ is under that key line in the sand, 433. The buy signal, and if you go on YouTube, you can actually search mother of all buy signals, or search Masters in Trading, mother of all buy signals, and you'll get a full explanation. I probably have 4 to 6 videos on this buy signal. What happens is, if these come crashing down, like this, straight up, straight down, straight up, straight down, straight up, straight down, that would give us a buy signal if that scenario presented. So right now, I just overlapped the SPY. And I overlapped the SPY because this move, straight up, straight down the last buy signal. Look at what happened. The market just absolutely took off. But all of these here too, down in March 23, spike, come down lower, the market just takes off. Same thing back here, spike, comes back lower, the market takes off. Look at this one back here. We go back to June 2022. you see the spike come right back. So the steeper it is, the stronger the rally is going to be. So again, let's use that 17 as our key off in VIX 9D tomorrow, and that 433, the QQQ line in the sand. One other reason, 83% the VIX trades within its expected move. Again, we are under that line in the sand. Bearish, but the market should be coming off. If the market is not selling off, we're going to follow that VIX 9D. This VIX falls within its expected range 83% of the time. Another good argument that the VIX sells off. When the VIX sells off, risk comes out of the market flies higher. New topic. In front of you, this is a chart we shared a little bit ago about copper. These are all copper companies. There's 4 different companies here. PIC, which is an ETF. Green is Rio. FCX is yellow. BHP is plum, mauve, pink, purple. I'm horrible at colors. Copper continues to rip higher. FCX continues to rip higher. BHP had a great day today, but BHP, if you're not in this trade, I love this trade. And if you are in this trade, I would tranche in with another level. Tranche. Tranche just means buying one level, buying another level, buying another level. You're tranching in 3 levels. BHP, if you already have the trade that we shared a little bit ago, we still very much like the BHP trade, and the BHP trade is going to be long June 62 halves, $1.20, $1.15. Long BHP. BHP has copper exposure and is extremely cheap relative to the other copper companies. Thanks for watching. Friday, we'll be back on live, 11 o'clock a.m. Eastern Time with our Trade of the Day. I'm Jonathan Rose, founder, Masters of Trading. Trade smart. See you live tomorrow.